Okay, welcome back, fail-safe investors. Welcome back, fail-safe family. You know, we're family here. We're all trying to further and progress our lives in our own special way and pretty much have enough income to survive or pretty much retire, whatever you want to do. You want to build wealth for whatever reason you want to build wealth. We're all here together to learn together, grow together, and see where the future takes us. So welcome to another edition of Battle of the Brand. So you already know what it is. If you've been following my channel, the last two videos I did was on Procter Gamble and Kimberly Clark, ticker symbol PG for Procter Gamble and KMB for Kimberly Clark. So in today's video, we're gonna put them head to head and see who come out on top when we ask ourselves three questions. Which one of these companies will come out on top in the question of which one of these companies have the most growth potential, the most sustainability potential, and the value. Like which one of these companies can you purchase at the price it's selling at right now and probably have maybe some principal appreciation, which means the company grow, the stock price grow, or at least in the bare minimum, you don't lose your initial investment. So all of that will be discussed in this episode, so let's go. Let's go. Okay, so we're gonna do this how we usually do this. We're gonna start off with growth. So which one of these companies has more growth potential? Now, I'm not saying that either one of these stocks is going to be that next growth stock where it goes from like 100 to like 1,000 or something like that. What I mean by growth is which one of these stocks can pretty much grow their revenue, grow the company, even if it's just average growth, which is like the 2% inflation on the dollar, which I've said, or the 8% returns that the stock market as a whole brings back. Either one of those type of growth, you pretty much grow the revenue, grow the net revenue, and pretty much pay out a dividend possibly. Both of these companies do pay out a dividend, but up that dividend, like pay out more profits. So you pretty much want to look at that when you're looking at growth. So we're gonna start off with Kimberly Clark. When it comes to growth, I don't see any growth in Kimberly Clark. And if you didn't see the video that I did on the stock analysis of Kimberly Clark brought in pretty much the same amount of revenue for the past 5 years with pretty much no change or minimum change, maybe like 100 million or a million more or less. But $18 billion in 2019, 2018, 2017, and 2016 and 15. They've pretty much been bringing in $18 billion. So when we look at Procter Gamble, which have been growing their revenue, and like I mentioned in that video, it's not the best, but it is growth. Now, Procter Gamble has been having like average revenue growth, but Procter Gamble also has more household products than Kimberly Clark. Now, that could be the case, but in this case, we're just gonna go with the facts. We're gonna stick to the facts that Procter Gamble has just had more revenue growth than Kimberly Clark. So when it comes to growth, we gotta go with the one that's already showing signs of growth, which would be Procter & Gamble. It is what it is, no bias here. So then we go to sustainability. Now, both of these companies are over 100 years old. Like both of these companies were started in the 1800s. Procter & Gamble is about 182 years old and Kimberly Clark is like 142 years old. Now, both these are old companies. Now, that doesn't necessarily mean that these companies will be around for another 100 years, but that is pretty much a good sign. And then the sector that these companies they're in the consumer staples sector. So they have a product that consumers will need at some point in their life, but that also means that the management has to do their own due diligence and make sure that the company grow or is at least financially healthy. Now, both of these companies are pretty much overvalued in my opinion. I'm just gonna be honest with you. Procter & Gamble and Kimberly Clark, both of them are overvalued. They shouldn't be selling at the price they're selling at, but that's a conversation for another video. But when it comes to sustainability, I would have to give it to Procter & Gamble just based on the brands and how diversified their brand market is. Now, both of these companies sell around the world. They have multiple brands all around the world, but Procter & Gamble has a more diversified brand portfolio. We just got to give this one to Procter & Gamble. So last but not least, we're gonna go into the value category. So value. Now, if you haven't been following my channel and this is probably the first time to my channel, welcome to the channel. This is Battle of Brands. You probably wanna go back and look at a couple other videos where I put pretty much companies up against their competitors and see who will come out on top. So how I define value is pretty much, in my definition when it comes to stocks, is the value you're getting for your dollar. Like, you don't want to buy any company that's overvalued to start with. Now, like I said, both of these companies are overvalued, but if you had to choose between both of these companies, I would say Procter Gamble was the value play, and not just because you're buying it at a cheaper stock price. So Procter Gamble is selling at around $138, $136. Currently, Kimberly Clark is selling around like $140 something. But Procter Gamble, like I said, like, they actually are growing their revenue. They're growing the net revenue. They're paying out the profits in a dividend. Now, both of these companies are paying a dividend. Actually, Kimberly Clark pays a higher dividend, but it's just that Procter & Gamble is just better suited to last longer and also grow. You definitely need, that is the most important part when it comes to any investment. You want growth in the company. It's plain and simple. That's as simple as I can put it. So I want to know what you guys think about this video. If you're enjoying the Battle of the Brand, hit the like button. It helps the channel. Hit the share button. Tell people about, you know, my channel if they're trying to get into stock. They can hit me up at Failsafe Wealth, you know, on any social media platform. I'm on all of them: Twitter, Facebook, and Instagram. So hit me up, leave a comment down below if you have any recommendations for next week's Battle of the Brand. I will be going on vacation soon, but I still will try to deliver you content while I'm on vacation. I'm not telling you where I'm going yet, but hit the share button, hit the subscribe button if you haven't subscribed already. And you know what I'm gonna say, let's get it, let's do it.